Invest with life insurance, not in, with. My name is Darius.
And I'm Carmen. I hope you can see the distinction. And if not, we are going to show you exactly what we mean in this video. But before we get started, go ahead and subscribe to our channel and hit the notifications bell so that you can be notified every time we post new videos.
Now, how did we get to this point? It started off with us investing in real estate. And when investing in real estate, at the time, we didn't have any money. So we had to go and find lenders to give us money so that we can invest. We keep the difference and they get a percentage of the deal. So that's how it worked. Now, the interesting thing is when we find lenders, we start to build a relationship with them and how they finance the deals in the first place. Now, one of the lenders that we worked with happened to give us money to invest in this real estate from his life insurance policy. And now our antennas went off. Not because he uses life insurance, but because the terms that came along with his investment. The first thing that happened was he said, I'm going to give you this loan for 5 years. The next thing was if we paid it back before 2.5 years, he's going to charge us money for paying him his money back early. Now, those two things together made us ask some questions. We
Change the game.
Yes, we got the money first and we got the check and we invested it. Then we came back and asked some questions because,
Like, hey, how'd you do this?
Yeah. So when we started to understand the thinking behind his decision to use his life insurance policy after he mentored us for a couple years, our idea changed as well.
I would even say more than idea, our philosophy on investing changed.
Yes.
Right? Just the whole ideology of like, okay, wait, no, we can do this more efficiently. We can do this better than what we've been taught. Because prior to this, we were always taught to take our savings and then invest our savings, right? Or take a piece of our income and put that in a retirement account. So that's why we want to make sure that you understand the distinction. When we talk about using life insurance, like this, the story that Darius just narrated for us is...
It was a quick and dirty narration.
It's so good. We take the cash value from a whole life insurance policy and we use that to invest. Now, why is this important for you to know? Is because typically we find that the consumers who buy life insurance, they don't really know that whole life insurance has cash value, meaning that there's cash that grows inside the policy and that you can do something with it. And it typically kind of lays dormant and it's there for like maybe an emergency fund, right? As opposed to using it to be more strategic with investing.
Actively using it. Yeah.
Actively. Exactly. Active, not passive. So once we understood this concept, we said, okay, every time that we get paid, we're going to take our active income and we're going to put that money into insurance policies. Why? Because for us, we're looking at insurance policies as the foundation or a system where we can start storing our capital. And that is important for us to look at things differently. Why? Because the only other place that you can store capital is a savings account. Right? So you can put money in a savings account. When you take money out, you're withdrawing it, meaning you no longer are earning interest, and you put money back in and it is what it is. But what we found with life insurance at the whole life insurance at the foundation is every time we pay our premium, which is putting money into the policy, we have cash value that's available to us. And if we take loans out, that allows our money to continue to earn compound interest. So every time that we have cash value available, we take loans out from the policy and we use the loans to then invest.
Now, here's just to cut in. Here's why that's important in the first place, because every dollar that we receive, it has debt already associated with it. It has debt already associated with it as soon as it hits our pocket.
Wow.
And the debt that I'm talking about is inflation. And the accounts that we have our money sitting in so that we can have access to it does not keep up with inflation. So right off top, we're already losing money. So to help with the mitigate risk of losing money from the start, we take a portion of our income and we put it into a life insurance policy. So at the bare minimum, we're able to keep up with inflation.
Absolutely.
Are you looking for a life insurance policy specifically designed to help you accomplish your financial goals?
And if you have a policy or if you're looking for more education, would you like to be a part of a community with like-minded individuals who are all using life insurance to accomplish their financial goals? If so, click on the link below. We would love for you to join the Wealth Nation Money School. So what we want to talk about today, which we've mentioned on previous videos, are 5 asset classes that you should be investing in. So again, how we talk about the flow is you take your savings or your active income, you put that in a whole life insurance policy. So at the bare minimum, you're earning compound interest regardless if you're investing or not. So you put your money in a whole life insurance policy. When it comes time for you to invest in the stock market, for example, you take a loan against your policy, go invest in the stock market. But you always have to make sure that any time that you invest, you have to be making more money than what it costs you to make money. So if you get a loan from the insurance company, our loans right now are 4%, and that is simple interest. So we know that every time that we get a loan, we have to make more than 4% in order for this opportunity to make sense. So we have a graphic that we created for our community, but we want to share this information with you on the YouTube channel as well, because it is so important to know. So we'll go ahead and share that here. So as you can see, we have a policy that we symbolize essentially as a tree. And we have 5 branches in this illustration where you can see we have bonds, stock, cash, real estate, and commodities.
Now, the important thing about these branches is there are other ways for you to make money. Now, we have the policy, which is separate. So we're not investing in the policy. We're just using that as insurance. Go figure. We're using our insurance as insurance. And we're borrowing cash to then invest in real estate, to then invest in the stock market, to then invest in debt or fixed income as an example. Now, even when we think about precious metals like our commodities, we want to use our policies to buy those things. One of the things is it's a hedge against inflation. Again, all these things that we're doing is so that we don't have our money sitting in just one asset class.
Yes.
It gives us the ability to diversify the asset that we already have. The key word is diversification, because the idea, again, is to have your money working in the place of you. Because money doesn't get tired. It doesn't take off for holidays. It doesn't have family issues. It doesn't have everything that we have. Money doesn't have. It doesn't
no
even,
emotions.
It doesn't even have an opinion. So the most important thing for us to do is to have our money working for us in a way that if something was to happen in the stock market, go figure, something happens in the stock market, we want the other asset classes to be able to pick up the slack so that we can continue making money no matter what the environment is. And the only way we can do that is through diversification and having different branches of investments that we can focus on.
Again, and we'll put the illustration back up on the screen again so you can see what we're saying, because what we want you to recognize is, again, using this tree as a symbol is every time the tree gets water, there's nutrients that are going to be carried throughout the tree onto all of the branches, and then it goes back and forth, right? So that's where we think about the policy as the tree trunk to your investments. Every time this tree is watered, and what we are essentially considering watering the tree is paying your premium or adding additional funds to your policy if you are able. Anytime that you can add more nutrients essentially to grow this policy, that is going to affect your ability to add more money into the other branches that you have to facilitate your banking system. So this is what we essentially consider your banking system, is when you have your policy working, you can't stop a tree from growing. As one of our students in the money school said, you can't just make it happen. So at the end of the day, you continue to water the tree, fund your policy, and you will have more and more cash available every single year to fund your investments.
Now, the interesting thing about this is the cycle that happens. The roots create the fruit. What type of fruit are you producing so that you don't have to go out and buy the fruit? If your tree is producing fruit, you don't have to go to somebody else's tree. You don't have to go to somebody else's job. You don't have to do something that you don't necessarily want to do, because your tree is producing fruit for you and your family. That's the idea behind this, creating this illustration of this tree, is so that you can go out there and do the things that is necessary for your tree to grow for you and not just your generation, the next generation and generation after that, because it's our responsibility to teach them how to plant their own trees.
Absolutely.
It's important for us to be able to teach them how to plant their own trees.
Go figure. I like how you said that. And the other thing too is we want you to recognize that it takes trees years to build, right? And to really establish themselves and to create enough roots where they can sustain themselves. So that's where you also have to think about this as a long, sustainable operation, as long as you are consistent, right? Continue to water your tree, continue to prune it, do whatever you need to do so that you can make sure that you are building the biggest, baddest tree on the block. And there's nothing that you can do to stop this tree from growing.
Now you can cut it down.
Growing.
You can cut it down.
Yeah,
you can get rid of your policy and things will change for you. But the idea behind it is to continue watering and continue to have your policy in place, because here's the thing behind dividend paying whole life insurance is every time you pay your premium, there's more cash available. And when it's designed correctly, your premiums, the cash value is more than your premiums. Our policies are annual, meaning that we pay our policies on an annual basis. So every time that we pay our premium, there's money available for us to use to go make an investment. The same thing works with the way that we use our policies, like real estate investments. As soon as money is available, we have real estate investments that we can use so that we can have our money not just sitting. And the same with other opportunities, the stock market. You have to build these systems to work hand in hand, because if there's a cog in the wheel, there's going to be a buildup of something that you won't be able to benefit from it. The whole point is to keep this thing greased, keep this thing watered, and make sure that it's constantly producing fruit for you so that it can be reused.
Now, twice a month, we meet with our community and we have amazing financial conversations. And this graphic literally came from this conversation because we were all just talking about systems and creating branches for our families. And then when we heard the word branches, like it immediately came to us like, oh my God, we're building a tree. We're putting a tree in our garden and we got to water this thing and we got to keep it alive. And so that's why we wanted to create this graphic so that you all can see, you all can really understand from a different perspective what we've been talking about all these years, and hopefully to help you recognize the power that you have to create your own tree, create your own opportunity so that you can use life insurance to invest.
Yes. And again, that tree isn't just good for you. It's good for everybody in your community. It's good for everybody watching you build this. It's good for your family. It's good for your friends. It's good for everybody that you come in contact with.
Yes, absolutely.
Because money is something that is circulated around the world. So your tree is going to be something that is going to affect everything around the world.
Now, if you want more details on how to create your own banking system, go ahead and check out our next video.
Remember to own your own lifestyle,
or someone else will.